Welcome to my latest video documenting my dividend journey. This month we will cover what dividends I received in February 2026 in both my stocks and shares ISA and my SIP. We will also cover the impact of currency exchange rates impacting the portfolio. And we will close out the video reviewing my year-to-date payouts. Now for the legal part. This video is not financial advice, I am simply documenting my journey towards financial freedom and leaving the rat race behind. Everything here is my own opinion based off of my own research. This month we will be covering what dividends I received within my ISA, which I currently hold with Trading 212. A stocks or shares ISA allows you to invest up to £20,000 per year tax-free. We will then be reviewing the dividends from my SIP, which is held with Interactive Investor. A SIP allows you to invest up to £60,000 per year tax-free, and the UK Gov will also offer tax relief on any contributions you make depending on your tax bracket. If you would like me to make a video explaining the tax benefits of these two accounts, let me know in the comments. The first dividend I received this month was from the Global X Nasdaq 100 Covered Calls ETF, ticker symbol QYLP. This is a covered calls ETF, which at a very basic level means the fund sells call options on shares they hold for Nasdaq 100 stocks such as Apple or Microsoft. I currently hold 20 shares at an average cost of £12.38. The exchange rate impact is £0 as this is a UK traded fund. This month QYLP paid me a dividend of £2.49. I am currently down by just £2.28, but if you factor in the dividends I am up by £33.27. This now brings my dividends for my ISA in February to £2.49. The next dividend I received this month was from Apple, ticker symbol AAPL. For me, Apple will be a buy and hold forever stock. They are a global leader in technology, one of only a handful trillion-dollar market cap companies, and personally for me they are currently highly undervalued. I currently hold 0.65 shares at an average cost of £158.66. I am working my way up to a target of 2 shares by the end of this year. The exchange rate impact is -£1.62, which is minimal considering the gains I have already achieved and the future potential gains this company has to offer. I'll take a couple of pence down due to exchange rates fluctuating. This month Apple paid me a dividend of 10 pence. I hold Apple mainly for the growth, instead of the dividends, as the yield is currently only 0.39%. I am currently up by 24.5% on this position. I am currently up by £25.32, and if you factor in the dividends I am up by £25.86 to date. This now brings my dividends for my ISA in February to £2.59. The next dividend I received this month was from Northland Power, ticker symbol NPI. As I mentioned in a previous video, this is one of my most underperforming stocks. That was true, until this week when they report earnings that shocked shareholders and institutional investors alike. If you would like a deep dive into this stock's amazing turnaround, let me know in the comments. I currently hold 14 shares at an average cost of $21.63. The exchange rate impact is at a modest £1.37, which is less than 10 pence per share. Due to the fluctuation of exchange rates, I am reluctant to hold too many non-UK stocks. This month Northland Power paid me a dividend of 38 pence. I am currently up by £6.97, and if you factor in the dividends I am up by £9.69. This now brings my dividends for my ISA in February to £2.97. The next dividend I received this month was from Starbucks, ticker symbol SBUX. Now this is a personal favorite stock, and like Apple, this will be a buy and hold forever stock. Starbucks has been lagging behind in recent months, but with their new CEO coming on board and his recently released plans to try and improve the company's image around healthy products, I think they're on the right track for a good recovery in the long term. I currently hold 4 shares at an average cost of $85.37. I plan to try and get this position up to 7 shares by the end of the year. The exchange rate impact is considerably high, with this stock sitting at £18.74 or nearly 7%. This is a huge hit to my gains, more than halving my growth figures. Long term I am hoping this will start to recover as I average more into the stock. This month Starbucks paid me a dividend of £1.56. I currently up by £15.29, and if you factor in the dividends I am up by £26.97. It is nice to know that most of my loss due to exchange rates are almost completed removed thanks to the dividends I have received. This now brings my dividends for my ISA in February to £4.53. The next dividend I received this month was from Greencoat UK Wind, ticker UKW. Now we are on to another renewable energy company, Greencoat UK Wind. This is by far the worst performing stock I hold. It has been in decline for just over 12 months, and from my understanding this is due to rising costs of maintenance of the wind farms, sales of older sites with no new developments to replace these sites, and the UK government not having a clear support plan for wind energy. I currently hold 212 shares at an average cost of £1.27. I only plan to reinvest the dividends with this stock, as I do not see a recovery coming anytime soon and do not feel it is the right time for me to grow this position. The exchange rate impact is £0, which is a positive. This month UKW paid me a dividend of £5.34, which has allowed me to increase my position from 206 to 212 shares. I am currently down by £66.67, and if you factor in the dividends I am still down by £35.64. The dividends almost halving my loss does make this a slightly less painful mistake. This now brings my dividends for my ISA in February to £9.87. The next dividend I received this month was from Gladstone Investment, ticker symbol GAIN. This is one of the very first stocks I bought when I started investing. I know I should aim for growth stocks, but I also want to have some stability during market downturns, and the monthly stock paying a 6% yield is something I'll happily accept to counter the downturns. I currently hold 20 shares at an average cost of $13.70. The exchange rate impact is minus £8.26, which has taken away a very small gain I had on this stock. This month GAIN paid me a dividend of £1.01. I currently down due to the exchange rate impact, but if you factor in the dividends I am up £26.47. For me, this is why I hold a few sideways trading dividend paying stocks. They might not grow as fast as Apple or Google, but they pay a steady monthly income which helps me grow other positions. This now brings my dividends for my ISA in February to £10.88. The next dividend I received this month was from 24 Select Monthly Income Fund, ticker SMIF. This is a closed-ended fund that has been trading sideways for a number of months now. I am using this dividend-paying stock to increase my monthly contributions to my SIP. I currently hold 6,003 shares at an average cost of £0.875. I am now at the stage where I will stop contributing to this particular fund, and will start to funnel these dividends into my all-world position. This is so I can capitalize on the all-world growth by using the dividends from a slow growth company. The exchange rate impact is £0, as this is a UK-traded fund. This month SMIF paid me a dividend of £25.88. This is sadly due to me increasing my position after the ex-dividend date. From next month we should be seeing around £30 a month coming in from this stock. I am currently down by £34.07, but if you factor in the dividends I am up £158.95. This now brings my dividends for my SIP in February to £25.88. The last dividend I received this month was from Realty Income, ticker symbol O. This is one of a number of REITs that I hold across both portfolios. I am undecided if I want to keep Realty Income long term or if I want to sell out and move it to another position. This is mainly due to the large amount of debt that Realty Income has and their fairly flatlining share price, but the positive here for me is their history of increasing their dividend once a quarter. I currently hold 103 shares at an average cost of $57.59. The exchange rate here I am unable to track due to Interactive Investor not offering this under their analytical tools. This month Realty Income paid me a dividend of £20.81. I am currently not putting this dividend back into Realty Income, but like with SMIF I am funneling these payments into my all-world fund. I am up on this position by £789.76 including dividends. I have done the rough conversion from dollar to British pounds to try and keep this as simple as possible. This now brings my dividends for my SIP in February to £46.69. Now let's compare this month's dividends. For the ISA, you can see my dividend payments are slightly higher this month compared to January. This is mainly due to a number of quarterly paying stocks paying me this month instead of just relying on my monthly paying stocks. For the SIP, you can see has only increased by a few pence. This is mainly due to the exchange rate fluctuations from realty income. Also, for the last 2 months only my monthly paying stocks have been paying dividends. I have a number of funds that pay semi-annual or quarterly that should increase my passive income this year. As you can see, over the last 2 months across both accounts I have earned just over £110 in truly passive income. These payments are all going back into the portfolios and should hopefully help me grow my positions towards my early retirement goals. Thank you for following my journey. If you enjoyed what you've seen, please think about liking or subscribing to the channel as it helps out a lot. If you have any advice or comments, feel free to leave these below, as I'm always looking for ways to improve the channel for you.